name is Ajao Babatunde Ifeolua. I am a manager in Ascension Consulting Services, transfer pricing department. I will be talking about transfer pricing regulation in Nigeria. Transfer pricing is the price adopted for bookkeeping purposes which the companies use to value the transactions between affiliated enterprises. Affiliated enterprises is most time referred to as related parties or connected persons. Regulation 12 of Nigerian Income Tax Transfer Pricing Regulation 2018 define connected persons. Persons are deemed to be connected when one controls the financial, commercial, and operational decision of the other one, or there is a third party that controls the activities of both companies. Majorly, transfer pricing is regulated in line with the requirement of the Nigerian Income Tax Transfer Price Regulation 2018, which repealed the old regulation of 2012. This regulation gives effect to the primary act, which are the Petroleum Profit Tax Act, Company Income Tax Act, and the Personal Income Tax Act. Transfer pricing regulation does not apply to all taxpayers. The scope of transfer pricing regulation is captured under the Regulation 3, which says that transfer pricing regulation shall apply to transactions between connected persons, and the transactions are listed which involve sales and purchase of goods and services, sales, purchase or lease of tangible asset, transfer of intangible asset, manufacturing arrangement, lending or borrowing. Most importantly, under Regulation 3, the Part G of that regulation says any other transactions that has direct impact on the revenue of the company. The requirement of transfer pricing is majorly captured under the Part 5 of the Nigerian Income Tax Transfer Pricing Regulation. And he mentioned three major things, which are the um, declaration, filing, disclosure filing, and maintenance of contemporaneous document, which is the transfer pricing documentation. I most times categorize this requirement into two: annual requirement and what I call one-off requirement, as the case may be. The annual requirement involve both the declaration and the disclosure. In declaration, you are required to provide information to FIRS concerning the entities that are within the group and the relationship. Under the disclosure, you are required to provide to FIRS the transactions that occur within the group among connected persons on an annual basis. Also, thirdly, which is the TP documentation, which is the box sum of. The TP documentation is usually referred to as a contemporaneous document. What this means is that the document was actually be maintained as at the time where when the transactions are occurring or are actually happening. So the onus is on the taxpayer to prepare and maintain this document. And this document um, is prepared to show one major thing, which is to ensure and to prove to FRS that the value of the connected person transaction is actually carried out at arm's length. The commencement of the new um, income tax transfer pricing regulation 2018 was 12th of March 2018. So, if there is any further questions that you would like us to answer, please, we are always here to support your business. Thank you.